Hey everyone, welcome back to Corporate Decoder. Today we are diving into a filing that, well, let's just say it is an amendment, because something was missing the first time around, and you know what they say about amendments? Sometimes they have to go back and fill in the important stuff. We are looking at Atlanticus Holdings Corporation, or ATLC as you might see them traded. This amendment, filed on the 28th of November 2025, is all about adding crucial financial details that were left out of their original report from September. Think of it like getting a report card and then realizing you forgot to attach your biggest test scores. The reason for this amendment is to finally provide the financial statements and pro forma, or what if financial information for a business they recently acquired. The big news here is that on the 11th of September 2025, Atlanticus Holdings Corporation, through a subsidiary, bought all the ownership stakes of a company called Mercury Financial LLC. This acquisition is a pretty significant move, and now we are finally getting a look at the financials of the company they bought, as well as how this deal is expected to impact Atlanticus itself on paper. So what did they add? First up, we have the audited financial statements for Mercury Financial LLC. This means an independent accounting firm, Grant Thornton LLP, basically gave these numbers a thumbs up. We are seeing their balance sheets which show what Mercury owned and owed, and their statements of operations and cash flows for the entire years of 2023 and 2024. This gives us a solid look at Mercury's financial health before the acquisition. Then they've also included the unaudited financial statements for Mercury for the first 6 months of 2025, ending on the 30th of June. Unaudited means Mercury compiled these themselves, and while they are important, they do not carry the same weight as the audited numbers. It gives us a more recent snapshot of Mercury's performance leading up to the deal. But the really interesting part for us as investors looking at Atlanticus Holdings itself is the pro forma financial information. Exhibit 99.3 is a condensed statement of operations that tries to show what Atlanticus Holdings would have looked like if the Mercury acquisition had happened earlier. We are seeing this information for the 9 months ending the 30th of September 2025 and for the full year of 2024. The key thing to remember here is that these are hypothetical numbers. They are not what actually happened, but rather an educated guess about the combined company's performance, presented for illustrative purposes. Now, let's look at Atlanticus Holdings Corporation's own publicly traded securities. They have common stock trading under the ticker ATLC on the Nasdaq Global Select Market. They also have Series B cumulative perpetual preferred stock with the ticker ATLCP, and 2 different senior notes. One is their 6.125% senior notes due in 2026, ticker ATLCL, and the other is their 9.25% senior notes due in 2029, ticker ATLCZ, both also on the Nasdaq Global Select Market. This tells us Atlanticus is a fairly established company with different ways of raising money and different classes of securities they offer to investors. Looking at the actual financials might be tricky without the full report, but the fact that this amendment is needed strongly suggests the original report was incomplete. When a company misses adding key financial data for an acquisition, it often means there were delays or complexities in getting those numbers ready. It could point to issues with the acquired company's accounting records or a rush to close the deal. The pro forma financial information is where we can try to gauge the immediate impact of this acquisition. We want to see if adding Mercury's revenue and expenses, for example, makes Atlanticus look significantly stronger, or if it seems to dilute their profitability. If Mercury was a very profitable company, the pro forma statements should show a healthy boost for Atlanticus. If Mercury was struggling, it might show that Atlanticus took on a bit of a financial challenge. Without the exact numbers from exhibits 99.1, 99.2 and 99.3, it is hard to give precise figures, but the context of this amendment is crucial. It highlights a business transaction that is significant enough to warrant a follow-up filing, indicating it is a material event for Atlanticus Holdings Corporation. So, what is my take on all this? This amendment to the 8K is essentially a cleanup operation. Atlanticus Holdings Corporation made a significant acquisition of Mercury Financial LLC, and they had to go back and file the required financial documentation. The need for an amendment suggests some initial haste or perhaps a touch of disorganization in their initial filing. It does not necessarily mean the acquisition is a bad thing, but it does make you wonder why the numbers weren't ready from the start. For investors, this means we should pay close attention to exhibits 99.1, 99.2, and especially 99.3 when dissecting this filing. The pro forma numbers will give us the first real glimpse into how this deal might move the needle for Atlanticus Holdings Corporation's financial picture. We need to see if Mercury is adding a significant revenue stream or if it is a drain on resources. Alright, that is our breakdown of Atlanticus Holdings Corporation's latest amended filing. What is your take on this acquisition and what the need for an amendment signifies? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more exclusive content and discussions. Thanks for watching. See you next time.